For years, my friends, I've been realizing some of the benefits of investing in companies. Yet many people out there, they are keep on investing in their personal names and they are not winning. I'm going to give you around about 5 things. And out of these 5 things, I think they're the top of the crop in terms of the pros in investing your assets into your company. Number one, if you are to invest your properties in a company, you're already giving an extra layer of protection against yourself. I'm going to elaborate a little bit further on this one. But the second one is that it increases borrowing power. So a person and a company, the way the banks look at these two is totally different. The third one is that, remember, you're a person. Your lifespan versus the lifespan of a company are two different things. Already you can see the benefits into that, isn't it? And then the fourth one is that, imagine if you were sitting on a holiday somewhere and you have to fly somewhere else or back to your home country so that you can just sign transfer papers. In our country, we do not allow a lot of electronics. We still require you to sign on paper. So if you are investing in companies, it makes the transferring process very, very easy. And again, I'll explain a little bit as I go towards the end of the video on this one. Then lastly, my friends, it's all around the tax. You might be saying, what do you mean by that? Again, right at the end, my friends, do not go away. I am going to be sharing some of the secrets of all these 5 benefits that I've personally realized, because I'm always investing in businesses or in a company. I do not own any property in my name. So I actually don't know why people would do that. But let's dive in today and talk about the reasons. So I don't want to say talk about it. I want to expand on these 5 points. So these 5 points I've given you up front. These are the benefits of you actually investing or buy all of your assets into a company. And now let me expand it a little bit for my friends. My name is TJ. If you've never been here before, I'm the founder here, and besides that, I am also an author. Some of these things that I speak about, I write them in my books. So if you're one of those people who are a bookworm, which I suggest that you should be, grab onto my website, buy some of the books there. I don't just only sell my books, but I also sell other books of people that have made an impact in other people or in my personal space. So you'll be able to see all of that. Let's jump in and talking a little bit more around this. So we spoke about protection. What do I mean by this? Now, if you are new here, I've been in business for a while and I've lost some money, lots of money. To be exact, I've lost 5 million rand. These were the days when I didn't know how to buy assets the correct way and everything was in my name. Fast forwarding, after I got some education and I got to be a little bit clever and I was more serious about my personal growth, I then realized, you can actually buy your assets into using a company. I started looking at what is the pros and cons of doing that. Immediately, the first thing that jumped out was protection. We could be asking ourselves the question to say, what about protection, TJ? Well, let's go back when I lost 5 million. Had I lost 5 million in a company, it would have been that company that lost the 5 million, not myself. But in this case, what basically happened is that I had utilized my personal capacity. So when I borrowed this 5 million plus, eventually when I lost it, I had no protection. So when the lender started chasing up, they didn't chase the company, they chased me. Does it make sense? So basically, if you are now buying your properties in a company or any other form of assets, you are literally just giving in another layer of protection, because now your personal liability or your personal assurance or your personal financials is now the second in line. It's no longer the first in line. So I encourage everybody, whatever that you're doing, try not to do anything in your personal name. Use this extra protection that we get from companies. And I know a lot of people, they just go and buy a company and they start trading in it. And again, there's no extra layer there because you are the owner of that company. So if anything is to go wrong, guess what's happening? They're going to come for you as well. But of course, we are not saying that we go into business and we are already assuming that things are going to go wrong. They will go wrong at some point. So that's why we need to have this protection. So if you're really serious about the business, then obviously you want to be implementing the right strategies up front, especially if they're available. So why would you just want to go buy properties in your name? Why don't you just use the extra protection that is there? So this is what I've seen as one of the biggest winner for me. Had I lost 5 million before, like I did in my personal name, my lifestyle would have been totally different today because that company is the one that would have gone down the drain with the 5 million. And my personal financial would still be okay. So which means that I can continue to do business. But what happened with my 5 million is that when my 5 million went under, so did my name also went under. So it took me a long time for me to recover. And some of you might already feeling the pain because that's where you are. Well, you are not alone, my friend. Welcome. We can be able to help you. So that's about personal protection or another extra layer of protection. When you're buying assets, always buy them in a company. Always make sure that there's another entity that is owning that company, maybe like a trust. But if you're really looking into getting into these things and you're very serious around it, I always suggest to people, don't just listen to videos and so on. Go and pay professionals that can advise you correctly on some of these things, and then you can do things the right thing. Don't be stingy, right? You're wanting to build a million rand, a multi-million rand business, but you're being stingy with paying a consultation of 2 grand or even less. What the hell? I don't understand how people think. But anyways, let's go on to point number 2. Point number 2 is that it is increased, I called it increased borrowing power. What do I mean by that? Well, my friends, some of us, we come from no money at all. So I got married. Oh, by the way, somebody hit me the other day. He says to me, "Hey, TJ, you're so lucky you got married to your wife." And I said, "Yeah, you're right. I'm very, very lucky." And then he's a young man, probably in his 20s. And he said, so I thought it was ending there, you know what I mean? So I was ready to tell him, marriage is difficult, but it's also amazing if the two of you understand that. That's where I was leading to. And then he hit me, "Oh, I also wish I had money so that I can get married to a colored chick." So I'm like, hold on. Are you implying that my wife got married to me because of money? And he's like, yeah, every black guy, TJ, that I know who's married into a different race, they all have money. So I said, bruh, hold on. When I said hello to my wife, back then we just boyfriend and girlfriend, I didn't have no money. Like all of this that you see didn't exist, right? I was driving a City Golf 1.1, I think it was, or 1.3, whatever it was, you know what I mean? And she was getting paid much better than I was getting paid. So she didn't come to me because of the money. I had swagger, bro. I approached, I did my thing. I did some flowers, I did some apples, and then bingo, she said yes eventually when I proposed. So do not think that people get married into the different races because of. But anyway, let's go back to the story. The real story that we're talking about is we got sidetracked there. We're talking about increased borrowing power. So, as I was explaining, my wife comes from no money. By the way, that was the point of that conversation, the way we got derailed. And I'm passionate about these things, Get married for the right reasons. If you get married for the right reasons, you're going to grow each other. You're going to grow your businesses. You're going to grow. It's just amazing. So get married for the right reasons. But you can also just become an instant millionaire by getting married to a right millionaire. You know what I mean? But let's come back again. Increased borrowing power. What does that mean? If your family structure is exactly like mine, where I have no backup, there's no parents that I can go and borrow some money from, so I have to play with debt for me to get rich or richer or wealth. So my other option would have been depending on my wife or my wife's family. But here we are. I didn't ask the question that was she wealthy. When I saw the beauty, my wife, she's like amazing. So I didn't ask that question. But when we was now getting married, I realized, oh, flip, she's also coming from a poor background. So here is two broke guys getting married. How are we going to start this thing up? And I then realized that we can borrow more money to build our wealth. So remember, I'm emphasizing the point here of increased borrowing power. So as a person, if we are to look at our current act of borrowing money in our country, it does give you a limitation if you're to borrow in your personal capacity. Oh, TJ, what if you are married? Yeah, even if you are married, the two of you have a limitation. The limitation comes from what is called the National Credit Act. Not all countries have this, right? So if you're in a different country, maybe this might not apply to you. Just look into what is in your area. So we've got what is called the National Credit Act. And basically the National Credit Act says to us that whoever that's borrowing in their personal capacity, they will have a limit, and I think the limit is around about 30% of their gross in terms of what they can borrow. So which basically means that once you have maxed that, you can borrow some more. But if you're doing this as a business, then like how are you going to grow? So automatically you can't. But if you are then going to borrow in a company, then there is no limitation, because there is no limitation on the companies borrowing money. So actually, from the bank perspective, you always hear me saying that from a bank perspective, because I was a banker before I turned out to be a real estate guy. So from a bank perspective, the banks are, I almost want to say they are kind of like designed to borrow more to the companies so that companies can then hire more people. When more people are hired, then the bank obviously is more secured now because that business is making more money, so there's growth in it. But above that, those individuals are also creating taxes to the government, and then our economy is now working and it's amazingly doing well. So the government actually wants us to borrow more, but not in our personal space. The government wants us to borrow more in companies. The banks are also designed to borrow more to the people. So you might actually see that some banks don't actually have what they call retail banking. They don't bank individuals. They bank companies only. So traditionally, back in the days when banks started off, they didn't start off by saying, hey, I want to offer credit cards to people, home loans to people. No. That was a by the way. They started off because they wanted to trade companies to companies and things like that, and that's how they were borrowing. And then they realized, oh, there's a pool of people here that we can save, and then they started saving us. So what I'm basically saying here, my friends, is that the opportunity for you to grow your business is a huge benefit if you are borrowing money in the company. Because in the company, now when you start showing your asset and your liabilities, and your assets are big and your cash flow is healthy, the bank is going to throw money to you, and bingo. I've never heard of a company that will say, of a bank that will say, don't borrow more money from us. They would always want to throw you money. Actually, in South Africa, we have, I think there's two banks that I'm aware of. The bigger you get as a company, they already want to have a stake in it. So they become like your bro bank, and they become a shareholder in it. So the increased borrowing power here, my friends, is amazing. It's a huge benefit, especially if you're coming from no money, right? I don't know how to stress that one out, but let's go on to the third point, which is lifespan of a person and a company are different. What do I mean by lifespan? Lifespan is that every person, not every person, every creature or every entity, it has that a start time and a dead time, right? When are you going to start? A human being, when did they get born? And when are they going to die, right? So in between here is called the lifespan. You got it? Awesome stuff, right? So now, what is the lifespan of a company? You can start a company here, and when does it die? It never dies, my friends. It actually never dies. We have seen many companies that have been in third, fourth, fifth generations, or companies that have been bought from other companies, and they go back to as far as the 1700s, and these companies are still in existence. So if you're an individual and you're buying your assets in your individual, there's another implication which is tying up to my point number 5, which is around taxes, is that when you die, not if you die, we're all going to die, right? So when we die, right, if you've been borrowing in your personal capacity, which is within this lifespan, it basically means that at that point in time, we now need to wind off everything. So maybe you haven't had an experience where someone has died in your family. So there's what is called an estate. When you die, the government will say, hey, wind off everything. Make sure that all of the liabilities are paid off, all the assets are given to whoever, and then obviously whatever that's left out is the one that gets distributed. But in this case, there's lots of other taxes that the government is going to take in between in here. So the lifespan of a person is much shorter compared to the lifespan of a company. So there's many things that you can do. So imagine if you had to buy your assets, a big building, you can actually leave that building when you die, when your son dies, when your daughter dies, when your grandkids dies, and that building will remain in that company for as long as that company is in existence. So the lifespan here, my friends, is amazing. This is what we also preach about at the tribe. Continuity is important. We call it succession plan, because many businesses fail because there is no succession plan. If you're doing stuff in your personal name, there's no succession plan there, right? So it's short-lived. The day that you go, bingo, everything else is gone. But the day that you go and everything else is in a company and it's well structured, my friends, that will just continue. Your missus, your mister, your kids, your grandkids, you might not even see them, right? You might not live to see them, but they will enjoy the fruits of your labor. So it's a humongous win, my friends, that we have here. I'm going to go into point number 4. Point number 4 is that the way a company is administered versus the individual, the way that the individual is administered is very different. So let's just take an example one, right? And this one, I really like it because it gets me to be omnipresent, and I'm so happy. So the way I want to explain it is efficiency. Actually, I didn't want to kind of like deep dive around this efficiency like in a wider space, but I thought let me just put it maybe in one aspect, and this is transfer. But think about it in many other things that you can do. So when you're doing a transfer of a property, everybody needs to sign for the documentation. If you're buying that property in your personal name, you need to go and sign, right? Wherever you are in the country, you need to go and sign. So which basically means that if you are not there, that transaction is not going to go ahead. So we got a blockage. Now, if you are buying in a company, right, the efficiency of transfer becomes amazingly well. And this is now speaking to my Omnipresence. I can just nominate John Brown to say John Brown has been nominated from our company, and we put in a a resolution around that. And all John Brown now needs to do is to go and do all the paperwork without me being there, and that transfer will happen within the business. How do you think that big businesses buy these properties? You think the owner of the business needs to be signing all the time? No. So this is the efficiency that I like to enjoy, my friends, because now I can be omnipresent. So I can be doing a deal in Cape Town while sitting in Johannesburg. I can do a deal in London whilst I'm sitting in Johannesburg. I can be in many, by the way, that's what omnipresence means, right? I can be in many places, and all I'm doing now is I'm delegating some of these things to other people, key people in the business, and they can execute on the behalf of the company. And if you're a person, it's pretty difficult. The red tape for you to go through that, it's pretty difficult. I hope, my friends, I am making sense. If I'm making sense in all of these things, do not forget to share this with other like-minded people so that all of us, we can grow. And by the way, I am going to jump onto the last one. And I think this last one is going to be the happy chappy for everybody. So let me expand the tax component, right? Now, I did say one of the benefits, and this is the big benefits, and for many people, even those that are not even earning money, they're always talking about taxes, how much taxes are. I'm like, but bro, you're not even making money. Why are you worried about taxes? Worry about taxes when you're making money, right? But here at the TJ Tribe, we take taxes very seriously, and we want you to do it the right way upfront, right? Because sometimes it's difficult now to retro some of these things. So what do I think that taxes is buying properties or any assets in your company is a huge advantage on a tax, right? Now, let's just define how taxes are built from a personal perspective and from a company perspective. The first one is that for all my taxes as an individual, right, as a person, if I buy assets or if I'm being billed from a tax perspective, if I'm making $1 million, I am not going to see my 450 because that's 45% of the highest tax bracket. So the government is already going to take that. I'm only going to see 550 of that money. Okay? So from a tax perspective, in your personal capacity, the taxman takes the money up front. Okay? Does that make sense? Okay, tick. By the way, if you have any follow-up questions, this was actually a question that someone asked us. And well done, I've forgotten that guy's name. And he basically asked, what is the benefits of buying it? And I was like, wow, this is such a cool question. Let me elaborate on it a little bit more. As you can see, I can spend the whole day talking about different scenarios here that can save these 5 things. These are my top 5. I've got more benefits, but I just thought let me give you 5 and elaborate on them a little bit. So we've spoken about the taxes of the individual. What about a company? How does taxes then calculate it? Again, you're earning the same 1 million, right? We did say 45% of it at maximum, bingo, is going to go to the taxman. On a company, my friend, you're going to get the entire 1 million in your bank account. And you're going to be able, so there's no tax upfront. But it doesn't mean that you're not getting taxed. You will get taxed. But when? So you're going to run all of your expenses, right, in the business. And if all of your expenses was, let's say, 990,000, right, and now you're left with 10,000 as your profit. you are only going to pay 20 up to 28% of the 10,000 rand. Oh, my man. So why are you not owning businesses? The government here is actually saying, we want you to own more companies. We want you to do businesses, my friends. That's why they're giving us these tax breaks. These are called tax breaks, right? Okay. But here's another thing I also want to speak about. So, the big thing around taxes is that not only do you pay it later that outside your expenses versus as an individual, when you are doing it, you get taxed upfront. But I think the most important part for me is, I think I need a drum roll for this one. Right. Upfront, there is many tax incentives. When you are doing real estate, specifically in your personal capacity, you are also going to get tax incentives, right? So they will say for maintenance, they will say for cell phone bills, anything to do related to this property, you can claim back, right? However, if you already own this building or properties or whatever assets it is in a company, like the tax breaks are huge. Basically anything that you're doing on that property, you can expense it because the property belongs to the company. It doesn't belong to you. But in your personal capacity, now you need to change. This one is mine, not this one is that. It's a chamos, kind of like. So my friends, I'm really hoping that the gentleman that asked this question, thank you very much for asking this question. We appreciate it. Anyone else who's got a question, let us know in the comments. We may take a little bit of time to respond to it. Sometimes we will respond immediately with just the word, or sometimes we'll take that question like how you asked now, and then we give you a little bit of more meat, and that's how all of us are going to grow. So until we meet each other again on the next video of the TJ Tribe, my friends, we will check you out. And don't forget to be awesome and keep on learning. Boom, boom. This is I, TJ.